Oh, hey there. So yesterday we were talking because I like to share information with people, and I was like, this is why it's important to buy a house, because of how much money you waste on rent. And so I asked the people that were in the room at the time how much you spent on rent. One person said $2,600 a month. One person said $1,650 and one person said $1,600. So we did the math. That's how much you're spending on rent every year, $31,200. Or $19,800 or $19,200, which is a lot of money. Now, if you made minimum payments and had a 7% interest rate, which is relatively low for right now, but I think they do just crop rates, and you pay $2,600 a month, you will pay on a $300,000 house, you will pay back $936,000. So that's $636,000 in interest that you're gonna pay. And so I was telling them, and so I think it's important to tell you guys how important it is to make bigger payments if you get the opportunity, okay? So first of all, this house will be worth more than this in 30 years. So you're gonna be okay even if you make minimum payments. But if you can make one extra payment a year, you will knock 15 years off of your loan, which means that you're gonna save $500,000 almost, 400 and whatever that is. If you pay bi-weekly instead of monthly, you knock 15 years off your loan. Now it depends exactly on interest rates and things like that. And they were like, how is that even possible? But it's because of the way that compound interest works, okay? And you can get an amortization chart or a loan calculator for free online and do the math yourself. And you can see how much money you're blowing. But we did the math on this one. So for a $2,600 a month payment, you're paying $57 a day in interest. And so if you can pay the same amount, so if you pay $2,600 a month or you pay $1,300 every 2 weeks, you will knock half of that loan off because of the way the interest works. So if you're getting $57 a day in interest and you don't get that last 2 weeks, well, that's like $700 in interest that you're not paying, that you're putting towards your principal, which then knocks that principal down lower and lower so that you're paying less and less per day and eventually knocking off a decade and a half of your mortgage. So I hope that helps you. I think it's very important that you do buy a house if you can. And if you can't, find a way and fix your credit so that you can buy a house and then pay that thing off as quickly as you can. 40% of American homeowners own their houses outright. It's not an undoable thing. I've owned, I stopped counting at 100 houses. I've owned well over 100 houses, and the longest it's taken me to pay off a house is 3.5 years. And that's when I was young and poor. So you can definitely do it. And people say, I can't afford to do this. And I'm like, you can't afford not to do this because you're paying for it one way or the other. And if you're just renting, you're not gonna keep any of your money and you're throwing it all in a hole. You're not building any equity and they can kick you out at any time. And you're paying their mortgage, you're paying their insurance, you're paying their property tax, and you're giving them money and lining their pockets and building their wealth. So now you know.